Hello, class. Hi, BFM. So, I'll be teaching you all personal financial planning. I'm just sharing my screen. Here we go. Okay. So, what do you mean by personal financial plan? It's a step-by-step process to meet your financial goals. Okay. Now, say for example, there are two people, Mr. X and Mr. Y. Both of them are from different financial backgrounds, different educational backgrounds, different cultural backgrounds. So, both of their financial plans will be different. Yes. Say, for example, both of them have to invest 50 lakh rupees. Okay. The amount is the same for both of them, Mr. X and Mr. Y. Mr. X is a person who comes from a very influential background. Like he has a good financial position. His financial position is quite strong. So for him, while making a financial plan, necessities will not be that important. Like, buying a house will not be that important because he already has a house. Whereas for Mr. Y, he comes from a very poor background. He has worked really hard and earned those 50 lakh rupees. Okay, Mr. X is someone who has just got those 50 lakh rupees by inheritance. And that's the reason he doesn't care much about the money. He will invest in different places where he wants to, but he'll not be that much cautious while investing. Mr. Y, on the other hand, he has earned those 50 lakh rupees. So he'll be very cautious as to where and when he is investing. He is a little bit on the side wherein he values money a lot. So the amount of interest that is flowing in, the amount of add-ons that he's getting on the capital that he's investing, for him those add-ons matter a lot. For Mr. X, those add-ons do not matter a lot. Why? Because he's already having a lot of cash with him. 50 lakh rupees is just a bonus amount that he's having. He has amounts in crores. So for him, those 50 lakh rupees don't matter much as compared to Mr. Y. So both of their financial plans will be different. It will vary from time to time. Okay. Say, for example, Mr. X doesn't know where to invest. He doesn't have that much idea as to where he needs to invest. That's the reason he just keeps investing money wherever he wants without even giving it a thought. Mr. Y, on the other hand, he has earned those 50 lakh rupees. So he's very much cautious as to where he's investing. Mr. X, he invests wherever he wants. That's the reason he lands up into a huge loss. Those 50 lakh rupees, say for example, he lost all his 50 lakh rupees. Now what happens? He wants a proper guide, a proper person who would actually guide him and give him insight as to where he has to invest, when he has to invest, and how much he has to invest. So Mr. X then goes to a financial planner. That financial planner studies the situation of Mr. X and then drafts a financial plan for him. The same thing happens with Mr. Y. Mr. Y does make profit, but still he needs a financial planner. He also approaches a financial planner, the same financial planner. The financial planner makes a suitable financial plan for him. Now listen to this carefully. Both of these people are having same 50 lakh rupees. Okay. But the financial planner will make different financial plans for both of them. Why? Because he knows that the nature of both these individuals is quite different. The spending capacity of these two individuals are different. The income that these two people are earning, they are different. Their backgrounds are different. Okay, so the amount that he's investing, where he's investing, how much he's investing for each different client varies. And the things that keep varying, like, the amount that he's investing, the time that he's investing, all these things need to be jotted down properly on a paper and be given to the client. The things that he's jotting down and explaining to the client is called as a financial plan. It becomes personalized when it is directed to a particular individual. Got it? So, before starting with a financial plan, can I say for a personal financial planner, establishing his relationship with his client is very important. Like, he has to be very much friendly, very much cordial, very much kind to his client. He cannot use hard harsh words with his client, or else his client will move towards a different financial planner. Okay. Now, you know what's the difference between a prospect and a client? First thing for a financial planner to understand is to understand the difference between a prospect and a client. A prospect is someone who can be converted into a client. A client is someone who is already giving you business. A prospect is someone who can give you business. So, a financial planner has to be very much careful about the words he uses, his body language, the way he treats his prospect as well as his client. Because if he's harsh with his client can always move towards the next financial planner. Okay. He has to be kind and thoughtful with his prospect, because that prospect will eventually be converted into his client, which who would give him business. So understanding the difference between a prospect and a client is very much important. The second part is modern business are based on building stable long-term relationships. Long-term relationships because you need to continue with that client for a long period of time. You know what? Getting new clients is very much difficult than maintaining those relationships with your already existing clients. So, focusing on the old relationships, focusing on long term relationships is more important than creating short term relationships. And for building long term relationship, the financial planner has to be very much what? He has to be very much loyal. He has to be very much thoughtful. He cannot just invest his client's money wherever he wants. He needs to do a thorough study and then invest so that he can give profits to his client. Otherwise, his client will move towards the next person. Third, a relationship should be revenue oriented. Here, you need to be very much clear as to what kind of relationship you're having with your client. You cannot cross your boundaries and get personal with your client. You need to maintain that professionalism. The fourth point is personal one to one conversation is a must for building relationships. Like, you need to meet your client and speak with your client face to face, eye to eye. You cannot just always use phone calls or WhatsApp chats to chat with your client. The client needs to come to you, or else you need to go to your client's place and make him understand the financial plan that you have drafted for him. The next is more of listening than of talking, correct? You need to listen more than you talk. That's the reason we keep scolding you in classrooms, right? Don't talk, be quiet, listen to what we are saying. Because the more you listen, the more you gain. The more you gain, the more you can learn, right? So the financial planner, he needs to talk. Obviously, he needs to talk, but he also needs to listen to what the client has to say. Because at times, the client can be smart. The client may know things which you don't know. So you need to listen to him and you need to take his viewpoint also. You need to consider his viewpoint. Next, picking up clues from his non-verbal behavior. You all know what is the meaning of verbal and non-verbal, right? Verbal is something which you express through words, like I'm conversing with you right now verbally. Non-verbal is your behavior, your attitude. Like, say, for example, Mr. X and Mr. Y, the same example, early example. Mr. X is someone who comes from a very rich financial background, and Mr. Y is someone who comes from a moderate or low middle class family background who has worked really hard. So if the financial planner is telling Mr. X, do one thing, invest 40 lakh rupees in a real estate, which is actually booming, some real estate project which is actually booming. And the financial planner does tell him that you will earn a really good amount out of this because I have studied this project really well. Mr. X readily agrees to it. Okay, fine. I had told you earlier, Mr. X doesn't value money that much. Why? Because he's having ample of cash with him, ample of money with him. So Mr. X will directly invest in that real estate project. Mr. Y, on the other hand, will hesitate. He will ask questions. Like out of the 50 lakh rupees, he's investing 40 lakh rupees, means 80% of the amount he's investing. So obviously, he will ask questions like how much will this project give me? When will this project give me? How much time will my money be blocked? And all such things. Because Mr. Y is concerned. He's concerned about his cash. He really cares because he has worked very hard for each and every penny. So here, this financial planner can pick up cues from the non-verbal behavior. He knows that yes, Mr. X will invest in this project. Mr. Y will not invest in this project. Okay. Depending upon that, he needs to change his financial plan. The next slide. Explaining the terms of relationship, fees and services. When the client comes to the financial planner needs to be very much clear as to what are the terms, what will be the fees, how much fees he'll charge, for what duration, and what will be the services which will be paid, what will be the complementary services, and all such things. This helps to avoid disputes, and expectations are defined. Okay. Next, costs of known beforehand would help prepare the client for budgeting. Costs of known beforehand means when the financial planner is establishing his relationship, like he's drafting a financial plan and he's explaining the services, the fees, and all such things. At that time, the costs, if the client comes to know the actual cost which will be incurred for paying to the financial planner, he can plan his budget accordingly. Next, often in the initial discussions, client asks several advices and opinions. The financial planner should be very skillful in stopping the provision of service which are not available free of cost in the market. At times, what happens, some clients are really smart. They come to the financial planner just to get some information from him free of cost. And at this time, the financial plan has to be very much smart into understanding which client is actually going to give him income, which he's going to earn from that client, and from which client he's not going to earn, and just waste his time. So at that time, he must be very much skillful into defining his terms of services, like what kind of free services can he give, and what services will be paid. So he needs to be skillful, and this skill is something which he'll gain through experience. Next, it is convenient to have a standard service package, but tailoring it to suit a client will add credence to customer relationship, loyalty, and is capable of commanding a premium fee. Obviously, if the a financial plan is tailored, if a financial plan is customized, it gives a good feeling. It gives a sense of a personal feeling. The client feels special about that plan because it is made specially for him, exclusively for him. So it can give you premium fees. That's what this point suggests. Next, several times it is observed that the free services provided are very inadequate and try to entice the client with premium services. Yeah, you know what this means. You must have seen some ads now in on Instagram or on any other social media account wherein these companies, they try to tell you or try to reveal something about you, but then they keep telling you, if you want more services, you need to click to our XYZ button and you need to pay so much fees. Say, take for example, any social media platform, or you can say, if you're talking about LinkedIn also charges fees if you want premium services. So initially they will give you free services like normal, like we use, and if you want some extra benefits, add-on benefits, you need to pay premium fees. So that's the thing which this point suggests. However, clients are basically looking for value for money, so the expected relationship should be symbiotic. Value for money, but obvious, like if you're going to some shop and you want to buy some shirt, you really like that shirt and you want to buy it, but if that shopkeeper charges haywirely for that shirt, obviously you're not going to buy it. Why you're not buying it? Not because you're not having money. You're not buying it because it is not giving you that value for that money. Like you like one shirt and you expect that shirt to be of around 500 rupees, but the shopkeeper says this shirt is of 7,000 rupees. Are you going to buy it? You will not buy it. I'm not saying you're not having cash, that's why you're not buying it. You're not buying it because you don't think it is worth 7,000 rupees. So whenever you're drafting a financial plan to your client, make sure that that plan which you're drafting is worth for the money that the client is giving you. Okay. Next, credibility and trustworthiness is paramount. You need to trust your client. One more thing, when you're making a financial plan with a client, do not ever disclose the same financial plan or the client's financial plan to somebody else. Do not say that Mr. X came to me and this is his financial plan to Mr. Y. And neither disclose Mr. Y's financial plan to Mr. X. You cannot do this. You need to maintain professionalism and you need to treat each client differently. Next, To imbibe the feeling of trust, it becomes important to display credentials, citations, and past performance so that the client is convinced that he or she has come to the right person. Like, say, for example, in my last records, there is one more person, Mr. A, for example. He came to me and he had the same amount of 50 lakh rupees with me. Through my financial plan, I increased his 50 lakh rupees to 60 lakh rupees, like 20% more. 20% more here is a really big deal. Okay, I'm increasing his amount from 50 lakh rupees to 60 lakh rupees. Like 10 lakh rupees, I'm increasing with my investment ideas. Now, this thing I need to show to Mr. X and Mr. Y. Why? Because I need them to believe in me. That if I can do it for Mr. A, I can also do it for Mr. X and Mr. Y. Okay. Next, building relationships through personal face-to-face relationships are becoming difficult. So technology is again being relied on. Yes, you use social media platforms, you use WhatsApp to stay connected with the client. Every time you cannot just meet that client on a face-to-face basis. You need to use technology here. So how technology may help in establishing relationships? First, social media. Yes, you know this platform. Second, breaking language barrier through interpreters. Okay. Third, data analytics tool to judge nonverbal behavior. Fourth, reach an audience located far away. This you can do through social media platforms. Last, online services or shopping establishes a relationship. Online services, like you can give free services online to clients who are prospects. Sorry. You can give free services to your prospects so that they turn into your clients. All right. So this is what we studied here, how to establish a relationship with the client. I hope you guys are thorough with this point. Okay. So, chalo bye. Have a good day. Take care.